Happy Monday, everybody. Not so happy here in the market. 7-1 declining to advancing stocks, just a little bit off of the lows. This is going to be a big week overall, and not just for earnings. We've got a number of catalysts that are out there. Just take a look here first. We've got the Fed meeting, of course, in the middle of the week, the FOMC. No rate hike, but what about that wind down of the bond portfolio? What about GDP in the first half? That'll be issues. The China delegations coming in for the trade talks. We've got a busy week for earnings, but I think number one story, you see this today, the global slowdown, not just with China, by the way, but the euro area as well. There's a broad decline in business confidence over there. That may well figure in. If you take a look at the sectors today, you can see the global concerns that are out there just in what the sectors are doing. Utilities and staples, defensive groups holding up better. Energy's got oil down. We've got nat gas down as well. Industrials are getting weighed down by the machinery group. And there's the semiconductor, SMH, down 2.7%. Obviously, that's NVIDIA there. And if you look at the big semis, I call them the big five that are out there. They're really the ones that move these indexes around, NVIDIA, Intel, Texas Instruments, Taiwan Semiconductor, and Broadcom. These are the big five. And the important thing about NVIDIA is it's very much a China story. Some of them are not so much. But NVIDIA, if you take a look at the breakdown here, 30% of their revenues are from Taiwan, 19% from mainland China. So they get 50% of their revenues just from Taiwan and mainland China, U.S., Japan, and the rest of the world, rounding that out. We like to educate people about what's in these ETF portfolios. We always mention this SMH, but it really is 40% are 5 or 6 companies here. And this is what happens when you get indexes that are market cap weighted. When you get big names with outsized influence, they drop really big on days when one of them are down, like NVIDIA, which is 6% of the weighting of the SMH right now. So let's move on. I'll just show you the industrial machinery stocks, obviously on the Caterpillar news, and the guys have gone over all of that. Deere, Cummins, Oshkosh, which makes specialty vehicles and often moves somewhat in line with Caterpillar, all to the downside. Now, Caterpillar is a little more diversified geographically, not as much of a China story as NVIDIA is. It's 40% of the revenues in the United States, Canada. Mainland China is only 5% of the revenues here, but you get the idea here. This company sells machinery all over the world, so if there's some kind of slowdown, particularly in Europe, they're going to feel it as well, and that's the bottom line here. That's what we're seeing right here. You just want to sum this all up. You know, we've been talking a lot. Mike Wilson at Morgan Stanley was correct, being bearish back in the fourth quarter, and his attitude today, he just has a note out here today, with most stocks up at least 10 to 15% from the lows. We think the risk reward is much less attractive at this point, given the numerous hurdles still confronting equity investors. And obviously, the one we're facing today is that global slowdown. Right now, we're just off of the lows, down 328 points.